20 before 9. Say it loud. Say it clear. How's your stocks doing? Oh, that wasn't what you were thinking. Well, you should be.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
So, let's check in and see what you want to ask your tax or legal advisor about, shall we? Check into your markets and find out what's happening to your money with the assistance of Phillip Statler from Statler Financial Services, who is on the telephone this morning. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well. It is, it's officially fall. Doesn't feel like it here, but it is, and the markets continue to climb up the steep mountain.
Oh, boy, did we have a party time again yesterday. I had record closes on the Dow, the S&P, and the NASDAQ. Dow was up to 46,382. That put it up 66 points yesterday. Standard & Poor's, another new record. We're so close to 6,700, you can taste it. Up $29 to 66.94 yesterday. NASDAQ up a rock-crushing 157 points to 22,788. We have one big day, and we'll cross 23,000 on the NASDAQ. And even the Russell 2000, you and I were comparing notes. They didn't quite beat their record close from last Thursday, but still they were up 0.6%, and that's not chopped liver on the small cap stocks either, is it?
No, it's really not. It was a great day yesterday, even though the Dow was the low guy on the totem pole. I mean, it was still a great day, and we continue to bump our noses on these highs. You had something that was really interesting to me, some numbers as to what the S&P 500 needs to do over the next 2 years just to make earnings per share kind of be palatable again.
Yeah, I found this kind of fascinating. You and I have been talking about the fact that it's starting to sometimes almost act like a bubble. Well, one of the big investment firms came up with the numbers. If we're going to get back down to the normal price-earnings ratios for what the Standard & Poor's 500 would normally be at, it's not normally as expensive as it is, obviously. But for the S&P to get back to its estimated normal earnings multiples, we'd need to grow our earnings on the Standard & Poor's 500 by 13.4% next year. Now, that's not completely out of the range because we've been averaging close to 10 this year. But we'd need to grow another 15% in 2027, and that's even if the conservative estimates as to how much the index is going to grow go up as well. Those are numbers that I got to believe some people in the executive suites and the big companies in the nation are going, over, don't you think?
Yeah, those are some that's pretty steady rises to get the numbers to kind of, get to where they should be historically on earnings per share. But we'll see. I mean, that's some big numbers to hit.
Absolutely. It just kind of threw me for a loop when you start looking at like 28% needed to just to get back to normal multiples. It just kind of makes one go, So if I was CEO in an executive suite. It's kind of funny. We had a relatively slow news week till we start getting to the big stuff on Thursday and Friday, but we're talking gossip because now that the Fed governors can talk and take the free food, they're all hitting the rubber chicken circuit. Yesterday we had Stephen Moran, the new addition to the board, outlining his argument for the Fed lowering rates another full 2 percentage points. So we're going to carry the debate into the public sector today. And now Jay Powell is going to be taking the microphone during the noon hour today, talking about why probably Stephen Moran is full of hooey, I would imagine. Wouldn't you guess that would be the basic term?
Probably so. And we got Michelle Bowman. She speaks here in another 15 minutes or so. Be
That's
interesting
right.
to
She's
see
on the
her
agenda
take.
too, isn't she?
Yeah, she is. So, yeah, several speeches today. It'll be interesting to see how they line up with Powell's speech. You got Bowman, and then you also have Bostic.
Yeah, now Bowman was one of the ones that was along with Moran as far as going for heavier rate cuts. She was one of those two written dissents we had a couple of months ago over whether or not we should be reducing rates more rapidly. So, the votes today are going to be about probably 2-1 at the very least in favor of more accelerated rate cuts. And I'm kind of wondering how the market is going to respond to the argument being taken to the public portfolio.
Yeah, that'll be it'll depend on what the argument is and how fast they think they want. I mean for Miranda to say 2%, what time frame? If that's between now and the first quarter of next year, that's a pretty accelerated decline in interest rates.
Yeah, that's where I start getting into the notion of what are we communicating when we do that size rate cut. That's why I was opposed to the half point in this last meeting, because it sends a telegraph to the markets that we're in deep doo-doo. Well, we drop points by another, let's say, full point between now and the end of the year. Yeah, my credit card balances will be happy with it. I'm probably not going to refinance my mortgage because I did it at the bottom, but a whole lot of refis will happen on mortgages and the like. It's probably good for the growth of the economy, but it's sending a message to the markets that the Federal Reserve thinks we're in some really deep doo-doo, and that's not what we want to communicate to the world markets.
No, it's really not. We don't want that at all. And so, any kind of thing that indicates a slowing of the economy, and that those kind of declines in interest rates, that to me broadcasts that we're the economy is really in trouble. And I don't know that we really see that yet. Um, we do see a slowing of the economy, which you would expect. But as inflation continues to rise, but we're still growing. At least that's what the numbers say.
Yeah, I mean, the analogy might be, we don't have lung cancer, but we do have a case of the flu, and we could probably use a little bit more easing on the interest rates in order to fix some of the challenges in the employment rate. But then again, like I said, we're talking about what a change communicates, and that's why I was happy to see them stop the balance sheet shedding, which kind of has the same effect, without communicating that we're in trouble with a big 0.5% rate cut a week ago. Other stuff on the companies, we're back to talking big tech. Oracle just absolutely went through the roof when they reported their earnings, then turned around and said, "Oh yeah, by the way, we're part of that sale of TikTok." So they had another big day yesterday, as what I've always kind of taken as being almost one of the dinosaurs in the high tech industry, suddenly now is getting cutting edge again.
They are. They're getting some legs under them again, and they're starting to find some ways to add value and to grow, which is what a company needs to do. Sometimes they have to reinvent themselves and find where they can fit in, and make money for their stockholders.
Absolutely. That's one of those real transition stories I find fascinating. Oracle, when they were first big in the market, they specialized in software for mini computers, and almost nobody has a mini computer anymore. It's either the microcomputers like we have on our desktop or the big mainframes that do AI, and Oracle was basically a dead issue for a while. They moved into cloud computing, they moved into software in the cloud, and now they're looking at buying TikTok. I kind of see them as being one of the poster children for a corporate turnaround in high tech.
They are. They definitely are. I mean, we've seen the numbers, we've seen what they say, and at least it looks like everybody's on board with what they're talking about. Could make a huge difference for Oracle.
Absolutely. Another high tech story that's out there. NVIDIA is not sitting on their hands while Oracle steals all their thunder. They announced yesterday they're going to crank $100 million into OpenAI, building a partnership between two giants in artificial intelligence. And their press release said it will bring 10 gigawatts of computing power to train the next ChatGPT. Eventually, ChatGPT is going to be hard to tell from our kids.
Yeah, that's a lot of energy.
We might prefer ChatGPT to our kids sometimes. I would imagine that's making both rather happy. You got any other tidbits? I've been kind of monopolizing my tidbit list because I found those two items absolutely fascinating.
I was kind of bumping through. I didn't see much other than Boeing. Boeing came out and Bloomberg reported that the U.S. ambassador to China said that the U.S. and China are in final stages of a huge, quote, deal for Boeing aircraft. And that's got Boeing trading up about 2.33% this morning. So that was some good news for them. Really, that's about it when it comes to just kind of some tidbits here and there. We do have one earning company, or maybe two, AutoZone, big auto parts store, retail store,
Mm-hmm.
a pretty big deal. They got stores all over the country. They missed on their
Ooh,
earnings per share and their revenue this last quarter, even though their same store sales seem to increase a little bit. So they're trading down 3.3%. And let's remember, Dave, that's not a cheap stock. Um, it's right now that being down 3.3 puts it at $3,985 a share.
I seem to remember they even had a stock split a while ago to bring the price down, if I remember correctly, didn't they?
I think it was one of the other auto stores
Okay. I
that
knew that
did that.
that catergory tends to be really high priced. You mentioned
Yep.
you found another one in there?
I did. It's not anything that you and I have heard of, I don't think. Firefly Aerospace. The aerospace company, they just went public about a month ago. And so this is their first report. And they saw a wider loss and lower revenue than was expected for this last quarter. And so they are getting hit pretty hard, down 11% this morning.
Ouch. Just one other thing that I heard from the top of the hour news this morning. Watching the cell phone companies might be interesting today. They shut down a great big server farm in New York that would look like it was designed to hack into and shut down the cell service in New York right in advance of the UN General Assembly opening. They did kill it. It's not going to do it because they managed to knock it down, but might be interesting with the cell phone companies knowing that they're targeted for hacking purposes. Resetting the table, we're looking at a green day from yesterday. All of them were either at or right near all-time record closes. 45 minutes before we open, what are we looking at this morning, Philip?
Dave, we got some green ink right now, at least. The Dow Jones Industrial 30 up almost 0.2%. Well, I say that the S&P 500 is flat right now. It's just flat, as well as the Nasdaq 100 flat. So the only thing that's got any bump today right now is the Dow up 0.2. The Russell 2000 is up a little over 15/100ths. That's it's green anyway. On the other side of
We'll
the
take
coin,
it.
we got silver up 1% today, still not quite back to its high. It's at $44.65 an ounce right now. Gold's up 1.1% at $3,817 an ounce, getting close to that 4,000 mark. Crude oil up 1.3% this morning to $63.08 a barrel.
Well, we were under 63 yesterday morning. I was getting kind of optimistic. Across the ponds, the Asian Rim market kind of had an off night, mostly dragged down by the Chinese mainland markets that were off by just under 0.25% on average. European markets are generally optimistic and happy this morning. The average European index up between 1/3 and 0.5% halfway through their trading day. Getting my retirement together takes an expert pair of eyes, Philip. How do I get a hold of you to use your eyes and get my retirement back on track?
David, give us a call at 863-382-0037 to schedule the core retirement analysis. It's 30 minutes on the phone, making sure that you are going in the right direction for that retirement you always dreamed of. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here again tomorrow morning about the same time. You have a good day, my friend, and I'll catch you then, all right?
All right, man. Take care.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.